Welcome back, guys. It's another episode of Standing on Business. Here I have with me today Joe Dougherty, the VP of Lending of CrossCountry Mortgage. Thank you for coming in today.
Happy to be here. Thank you for having me.
Absolutely. So tell me a little bit more about your role. Tell me about CrossCountry Mortgage. What is it for those that are maybe
Sure.
unfamiliar?
Yeah, so CrossCountry Mortgage is the largest distributive retail lender in the United States. We are just a mortgage lender, meaning we don't do auto loans, checking savings. We just specialize in mortgage lending for homeowners. Um, and because of that, we have a lot of different lending programs so we can help more people, whether it's investors, first time home buyers, move up buyers, move down buyers with like reverse mortgages. So we can pretty much do anything. So it gives me an opportunity to help a ton of people in the area.
Awesome. So what's
Yeah.
kind of your service area? Just this like CNY area or further out?
Actually, I'm personally licensed in 7 states. Cross Country Mortgage gives me the ability to lend in any state with some of our partners that are also in the with the Cross Country brand. Um, but yeah, specifically Greater Syracuse area, some Rochester, some Albany, and then mainly the Gulf side of Florida. I have some relationships down there.
Awesome. Awesome.
Yeah.
What kind of brought you to CrossCountry Mortgage? Where kind of talk to me about your path of getting into
Yeah,
that.
it's great question. I started in mortgage lending 24 years ago. I was in my early 20s, and I'm kind of dating myself now. But and I cut my teeth as a broker
Okay.
in the business, meaning that we put loans together for people, and we can work with a multitude of banks. And went through a couple different iterations, and came to Cross Country Mortgage, having worked for a couple different banks because placing my license with a bank like this gives me all the power of a huge lending machine in the mortgage space, but it still has local values. So I know all the local players, attorneys, appraisers, real estate agents to work with. So where Cross Country Mortgage is different is that we have a very locally based staff of loan officers, but we have all the power of a huge bank. So it's kind of the best of both worlds. If that makes sense.
Yeah, yeah. So I guess what's the kind of the difference of coming to you as opposed to maybe going to your local federal credit union or something like that?
Great question. So, in this market where it's very difficult and very competitive, a local credit union, and that's not to say that they don't have their place in the community for lending purposes, uh, only has a few different products. They might be limited on their appetite for what they're willing to do in terms of approvals or mortgage products, whereas we have a ton of different programs. And sometimes not only can we help more people qualify to get home loans, but we can use aggressive approval techniques to help their offer stand out amongst, say, a local credit union that might have only conventional financing or FHA. We might have some different programs that allow them to be more competitive when they're bidding to purchase a home.
Gotcha.
Yeah.
So what's the I guess the kind of trends that you're seeing right now in the mortgage or the home ownership space, you could say?
It's a very fast market, which adds a level of stress. So, if you're a new home buyer and you're out looking for a house, you may have looked at several houses already with your real estate agent and realized that you couldn't go under contract or get your offer accepted because there is so much competition. And you have to make very fast decisions and big decisions. So, if you're a first time home buyer making the biggest investment of your life, and you have to make a decision by 5 p.m. tonight on something like that,
Yeah.
you have to work with a group and a loan officer and bank that makes you feel very comfortable making fast decisions. So that's really the trend is that there's still a shortage of housing, so there's competition. And to be a homeowner today is difficult. You have to really be aggressive and you have to set yourself up to win. Because essentially when you're bidding on a house, it's an auction, right?
Yeah.
And it's to the highest bidder, they say it goes. Something that's generally true, not always. Um, and when you're doing that, you want to make sure that you have a really good financing strategy behind you.
Can you give me a little more information on that? What do you mean by that?
Sure. So if you're competing on a house and it's your dream house and you have a lot of competition, you have to be willing to know what your purchasing power is, what those payments look like, if you can afford it. You may employ techniques such as going non-contingent, meaning you don't have to sell your house to qualify for this. And we have a lot of different ways to structure that financing. And if you're at your local bank and you have to go contingent and you're coming in with kind of a vanilla pre-approval letter, which is your proof of funds, then it's going to be very difficult for you to compete, especially if you're competing against, a team like mine or a cash offer,
Yeah.
right? So our mortgage clients will compete against cash. So we can guarantee the mortgage with something called the Cash Plus. We can offer the seller guarantees. We can typically do faster commitment and closing times. All of those bake into a better offer to try and get our clients to win in this market. And essentially, winning is the goal, right? You go out to look for a house, you want to win.
Yeah.
You want to find the house you want to put in an offer, you want that offer accepted. And we help more home buyers and prospects do that than just your average savings and loan.
Yeah. I was
Yeah.
scrolling on your Instagram and I saw that a couple of like kind of success stories of like first time homeowners, people that
Yeah.
you guys helped out with. Kind of give me a little like kind of taste into that. What do you recommend for someone that's, maybe in their late 20s, maybe early 30s,
Hmm.
looking to become a homeowner? Kind of
Yeah.
your tips and tricks of like kind of the preparing for that process, what that process kind of looks like, and advice that maybe the secrets of the trade that they might not know.
Sure. The first thing I always recommend is when you start to flirt with homes online and decide you want to become a homeowner, everybody suddenly becomes an expert. Your uncle, your friend that just bought a house, your parents, um, TikTok,
Yep.
people are. And my advice is don't listen to any of that and get a real recommendation from a loan officer with experience. Because if you're self diagnosing your situation, you're going to go down a rabbit hole, waste a lot of time, and probably be led in a lot of different directions. Every mortgage is as individual and unique to a person as their own personality is. Everyone has a different credit score, financial situation. And so you need a mortgage product that's tailored to that. So my advice is team up with a really experienced, good loan officer team that has a track record of proven experience. Now, on the first time homebuyer front, we have a whole playbook because when you're a first time homebuyer, you're excited, you're nervous, you don't know what you're getting into. I find that a lot of fun
Yeah.
because, and that's the reward of the job for me is to see people go under contract for the first time. I've had first time homebuyers cry at the closing table if they're first generation homeowners. In other words, their families did not ever own a home, they were
Yep.
renters and they kind of broke that cycle and now they're a homeowner. It's very emotional, which is rewarding for us to see that milestone. Buying a house is an emotionally charged purchase. So we have to be part psychologist and part mortgage lender,
Yeah.
and make people feel comfortable making those big decisions. So that's my advice, first time home buyers.
Get a good team. Get people that know.
Get a good team, somebody you feel confident with. You wouldn't go to defend yourself in court by yourself, would you? You'd get a good
Exactly.
attorney. You wouldn't do surgery on yourself, so go to an expert and really get some real answers on the way you should go. And I love what I do. So we pride ourselves on making sure we're putting them into a home loan that is comfortable for their budget, not just what we can qualify them for, but making sure that they don't feel house poor
Yeah.
or they have buyer's remorse. They buy something. Um, when somebody gets their contract accepted and they're a first time home buyer, the first thing they do is they say, "Oh no, what did I get myself into? I'm under contract."
Yeah.
And so you make them feel comfortable. You let them know it's a process. It is and in New York State, especially, the process to purchase a home is a little more laborious than it is in other states because we're an attorney state. It takes about 26 people involved in one single transaction to get a loan to the closing table.
Wow.
Isn't that astounding?
That's crazy.
Yeah. So there's wire clerks, surveyors, appraisers, attorney teams, title companies, and all those people. And that's why we always say it takes a village to close a mortgage loan. But if you have a good mortgage team, a good real estate team that's quarterbacking the transaction, then you should be fine.
From a, I guess, from a financial standpoint, what's realistic in our Syracuse area here, central New York, Onondaga County area, for someone to be like, okay, this is kind of the benchmarks that I should be looking at to
hmm
afford a, let's say, for example, your average home here in our area?
That's a great question. And I think people fall in love with the idea of purchasing a home before they find out how much they can afford. So we always try to get people to pre-qualify before you buy or get your hopes up on anything. So it's really depends on the person, and how much they, what their work history is. We do some calculations known as debt to income ratio calculation, and we teach them and are very transparent about how it works, about why they qualify for what they qualify for. We ask some questions right from the beginning. Why do you want to buy a house? We want to know the whole story. Well, we're having a family, we're having children, or we need the school district, or in more unfortunate situations, divorce, or we got to take care of my mother, or we're relocating. There's always a human component to what we do on the mortgage side, and we try and get really intimate about those details so that we can know how to pre-qualify them or pre-approve them for something that's going to be right for their situation,
Yeah.
if that makes sense.
In a most ideal world, kind of like, hey, this is the checklist. I'm looking to buy a house. What's the, kind of the step like to be in it? Because I know that you're gonna try to help someone in their situation, in their present
hmm
situation, to get whatever they can, possibly afford or get approved for. But if, let's say, for example, someone's preparing themselves for that process and they're like, hey, I want to get myself, quote unquote, the most right possible right now.
hmm
What's the things that you would recommend to somebody?
I still think you should call and talk to a qualified mortgage professional before you think that you're ready to apply. And here's why. I've heard it over the years, and I've been doing this 24 years of, well, I'm not ready to apply. I want to pay down this card. I want to get this right or that right. And basically it's an anxiety point
Hmm.
to apply for credit. Nobody wakes up in the morning and says, you know what? Let's get my social security, let's pull my credit
Yeah.
and, let's unravel my life to these people. But oftentimes they don't really know what they're doing to get ready. And with our team, we don't turn anybody down or use words like decline. We come up with a roadmap, even if they don't qualify now, to say, hey, listen, here's where you are. We're going to put you into our mortgage coaching program. And so we have a path for everybody, even if they're not ready for 3, 5, 6 years, doesn't matter. So we can always come up with a plan for somebody. So I always say, you don't need to get ready.
Really?
Yeah, you need to get a recommendation, and recommendations are free. We talk to people every day that we can't pre-approve, but we at least give them a roadmap and give them the staircase. We always say you don't need to see the full staircase to take the first step,
Yeah.
right? So the first step really is talking to somebody that's a mortgage professional that
And
really knows what they're doing and loves what they do, like my team.
absolutely. Talk to me a little bit about your team. So you're the VP of
Yep.
lending, but then under you, or I guess, are you really like kind of hands-on involved with every single transaction, or is it more you have
Yeah.
a team? Kind of talk to me a little about
So
that.
I'm definitely a producing manager, what I do. So I still have a pipeline of loans that I work on. I have loan officer assistants and processors, file openers, and I also have a couple loan officers, and we're expanding in this area. So I just opened up CrossCountry Mortgage in this area this October of 2023. So we're only in it for 3 years. We're growing substantially. We have some really, really kick ass branches already established in Buffalo, Rochester. We're growing very fast. And then we're looking at opening up Albany as well. And in terms of my team, we huddle every morning just to make sure everybody's taken care of, that we're meeting deadlines, realtors are updated, and that the file's moving along so we can get to the closing table.
Yeah. When it comes to that kind of process, how do you see yourself as a boss? Like, kind of, what's your style of direction of leading the team?
That's a great question. I'm a work in progress. And I went from having my mind set on just being the top loan officer of the world, you know, to now I want to help other people become great loan officers. And there was many, months and years in a row where I was had the top loan officer team in Onondaga County by far, and took a lot of pride in that. And so my focus has changed to recruiting and developing new talent as I age out and teaching them what I've learned over the years. And so I'm working on my leadership skills. It's a tough industry. And when you have somebody that's brave enough to become a loan officer, especially in this volatile real estate market that we're in now, it's interesting to coach them along the right path so that they can keep, positive energy. My style, I think, overall is it's not life or death. Let's do one thing at a time. Let's try and, stay calm and find solutions.
Yeah. In terms of someone that might be interested in getting into the industry, becoming a loan officer, what would that process look like for someone that's interested in getting into the mortgage side of the real estate industry? What does that look like? What should they kind of know ahead of time?
Yeah, it's interesting because there is no real preparatory college class. Finance isn't something we learn in high school, what it's going to be or what it's going to take to become a homeowner. How much money should you save? What your FICO score needs to be to qualify for certain programs. So you really have to get into a mentorship with somebody who's willing to take you on and shadow what you do for a while. So it's really an apprenticeship kind of thing.
Hmm.
Right now, I have somebody that's starting who was a pilot in the Air Force and he's retiring out. And we're starting a division that just helps veterans with VA home loans. And I actually did his VA home loan before, and he was excellent. He ran the drone programs. He's done hundreds of missions, and he's amazing. Somebody like that, he's like, you know what? In my retirement, when I retire from the military, I can't do nothing, and what you did for me is amazing. So I want to mentor you and learn this VA home loan program. And so it's situations like that where you just kind of find, people, and you're like, yep, we'll bring you into it,
Yeah.
because there is a large cost to training somebody in this business.
Hmm.
It's pretty involved. There's a lot of different mortgage programs. There's a lot of underwriting guidelines. Some of those are rained down from the government, from Fannie Mae and Freddie Mac. You guys
Hmm.
might have heard those terms on
Yep.
the news somewhere. Don't really know what they mean, but it's basically underwriting standardization so that companies that participate in originating mortgages can underwrite them to a certain standard that's approved by those government-backed entities.
Yep.
And then there's non-QM loans like DSCR for investors, which basically takes the rent from the property to qualify for the loan.
Hmm.
So that's just a couple examples of how many different programs there are. I mean, there's books and books thick of underwriting guidelines. Of course, we don't go through books anymore, but
Yeah. Are you looking for a certain, I guess, like almost like flavor of person, a certain kind of vibe that a person gives off more than a skill set or some, their qualifications, you would say?
Mhm. I think if somebody's passionate enough about getting into this field, they'll find a way to do it, and they'll find somebody that's willing to train them. Um, but you have to have a really good temperament, because you're not really B2C and you're not really B2B, you're B2B to C,
Hmm.
business to business. 100% of our business comes from realtor referrals or financial advisors, sometimes attorneys. And then we're also customer facing to walk them through that home buying journey. So you have to have the temperament where you know how to talk to professionals in the industry, and then also have a really hand-holding white glove approach with the borrowers. So it takes somebody that can kind of balance both of those scales of communication. I would say you have to be a really good communicator and be really confident in what you're doing, because screwing up could be disastrous. If you put a loan through that you then it can't go and it was on you, that's a
Hmm.
huge financial error. So it takes confidence, really good communication, somebody that enjoys looking at markets and finances, just kind of likes that stuff.
Yeah.
before I did this, I was in financial advisement. I mean, I'll geek out on charts and looking at treasury bond charts and stuff like that. I mean, if you have that and you're a good communicator and it's
Yeah.
something you want to get into, chances are you can be taught.
So, you said there about creating the referral between and you getting referrals from realtors and for someone that's maybe a business owner and that's trying to cultivate more referrals and have that referral network. Can you lend some advice in that?
Sure. The good old fashioned presentations work really well, getting a group together and presenting in front of them. So, all at once, you're making an impact and delivering your message face to face to a local group. Uh, I don't do a lot of webinars, but I imagine they do pretty well, if you can get the attendance there. I'm kind of old fashioned. I think the meeting a group face to face, if you can get 20 to 50 people in a room that might be referral sources, and you can add value and let them know what your value proposition is, how you can help each other. That's a really simple way. Obviously, you know, we do a lot of happy hours for realtors.
I'm
We
sure
like
that's
to
a
have
I'm sure that's
fun
a
too.
blast.
Yeah, we have fun. Um, but generally, yeah, getting out there, joining organizations, something that's close to you. I'm in the Home Builders and Remodelers Association of CNY. That's a really good group of people that are looking to build homes, and there's a lot of headwinds to that. It's a lot of red tape to being a home builder, so you learn a lot from that. I like to surround myself with people that I can learn from. And in terms of generating business to business referrals, really the good old fashioned calling, getting coffee appointments and spreading the word that way. And then balancing that out with stuff like this,
Yeah,
podcasts and some social media.
definitely.
Kind of simple.
Just basically just getting your name out there essentially, just getting yourself either physically face to
Hmm.
face or either through social media or in some other aspect because it really is it's a people business at the end of the day.
It is a people business. And with something as big as buying a house, especially if you're buying your first house, most people want to talk to somebody, and not just be thrown a link to apply and thrown into a machine and then aren't really explained or given that warmth that they know that they're being taken
Hmm.
care of in a transaction.
Yeah.
So, yeah, definitely a people business.
Now, do you guys mostly specialize in residential? Like, I'm buying a home for my family, or do you do like if I'm looking to get a rental property, I'm trying to expand my portfolio, working with businesses. What's your, I guess, or you do everything?
I do a little bit of everything, mainly residential,
Hmm.
which includes investors. So
Hmm.
if you're looking to buy 2 to 4 unit properties, my son, 20 years old, just bought his first 2 unit property.
Congrats.
I love, yeah, man. I'm very proud. He did it all on his own, really. Worked his job, qualified, and that's really exciting. But other young people that are buying their first house, it's fun to coach them and tell them, hey, listen, you don't have to buy your forever home and save up for one lucky day with a white picket fence and a
Yeah.
dog. And, you can get into real estate now and think about investing. And one cool thing about young people buying their first house that's a multi unit is you can use the income from the other units you are not occupying to count toward your income to qualify. Does
Yeah.
that make sense?
Yeah.
Yeah. So that's not a lot of people know that. And then for seasoned investors, we have all kinds of programs that help them just multiply their portfolio of rental properties. I mean, essentially, if somebody has 20% to put down, but can't really show traditional income, in theory, we could loan an infinite number of
Hmm.
mortgages for them to expand their portfolio. Pretty cool.
Yeah. I want to touch upon that topic. You said your son, 20 years old, because nowadays, especially on social media, everyone's always, I want to say, complaining. To be honest with you, that home ownership is just out of the realm. At least, I guess people. I'm 26. People my age, kind of, everyone's already home ownership is not possible. Home ownership nowadays, our economy, blah 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 blah.
Hmm.
Which to a certain extent, I do see like the kind of home that you could buy 10 years ago and the kind of home and the same and basically what that same amount of money is going to get you now is nowhere near but in your opinion and from what you're seeing, is it impossible, or is it more because of people's expectations of what they think is possible today?
Great question. I think that people have an idea of what's expensive and what's not expensive, and what's attainable and what's not attainable. And if you look back at like your grandparents when they were like, movies used to cost a nickel,
Mhm.
and now somebody's saying, I can't believe this house is 250,000. When I bought a house, it was 50,000. It's always been that way.
Yeah.
And so people like to your point, complain or say that's way too expensive or rates are too high, or those are just numbers. And it's not an insurmountable task to become a homeowner. And people give themselves self talk and self diagnose the market and the situation, when in reality, it's just the same version of what's been happening in the economy over time. And it
Yeah.
happens in every economy. So, one, I think generally speaking, people do qualify more often than they even realize,
Mhm.
and they stop themselves from applying or getting that information. And the longer they wait, the more it costs them.
Absolutely.
The more they sit around and say, I got to be more prepared, I got to be more prepared. Well, the longer you wait, the more it's going to cost you to enter the market.
And
Don't
everything is
don't
going up.
time the market.
Yeah.
You're not an expert. You're not, unless you're, trying to acquire like some 100 unit big, crazy investment strategy. Timing the market is not your friend.
Yeah.
The quicker, the better. So
Absolutely. Yeah, 'cause, as time goes on, everything's just gonna continue getting more expensive.
exactly.
Yeah.
Yeah.
And I think a lot of people, like, unfortunately, they're waiting for some crash. But
Yeah.
from what I am kind of seeing and what we're even hearing from our conversations is that I don't think that that's gonna happen anytime soon, just because
Hmm.
at least not in that same exact way. Um,
Right.
or to say that, we're gonna wake up tomorrow and houses are gonna go back to the price that they were. Everything just
Right.
keeps getting more expensive across the board.
And being an alarmist gets you more clicks on social media. The economy's going to crash, the dollar's going to go to zero. I lived through a couple market cycles, and I would even get trapped in that when I was a young man. I was like, oh my God, you know, um, I lived to the year 2000. The internet's going to go down.
Yeah.
The world's going to end.
Yeah.
So doom and gloom is just so juicy for
Mhm.
people's minds because they, doomsday preppers, you know. But the reality is it's very difficult. We have a lot of smart people, believe it or not, whether they're criticized, whether you like it or not. It's very unlikely that they're going to allow the economy to crash, or there's going to be volatility. There always is. There was, high inflation. There's been higher interest rates. I think in the 80s, interest rates were 15, 16%, and then people today are like, oh my God, 6.5. That's outrageous. I'm
Yeah.
like, well, what is outrageous exactly?
Yeah.
you
I
know?
remember looking at it was income tax, and like we're saying that taxes are so high, this, that, and the other thing, but looking back historically, how much percentage wise Americans were paying in the 50s and 60s in income tax as opposed to today. And it's almost, or like for example the 20s, and it's comical almost in a way
Yeah.
of how much less it is now, but just because
Right.
of the the nature of everything's more expensive and everything's so bad, and
Yep.
people want to make it more kind of exactly you said alarmist than it really is.
That's right. Yeah. I mean, people that are waiting for, let's just use interest rates as an example, because it's so high and on the front page of the news so much over the past couple of years, because interest rates were really artificially down for so long. There's people that are sitting on 2 and 3% interest rates, which is basically free money. It's lower than the rate of inflation, and when it goes from 3 to 7 in a short period of time, you're going to have something called recency bias, where people now immediately think that the new rates are just outrageously
Outrageous,
high.
yeah.
And in comparison, they're correct, but really, corrections, that was a healthy correction in the market because we were flooding the economy with so many dollars to
Yeah.
push rates down. It's called quantitative easing.
Mhm.
That at some point, a healthy economy has to have it go in the other
Yeah.
direction so
Just
that
too
we
much
can.
access to money essentially for someone,
Exactly.
yeah.
Yep, exactly. And so people that wait for rates to change, it's not a good move because you can always change your rate. but you can't change the price that you paid for the house,
Yeah.
and people are renting. I have somebody, that's paying 2,500 a month. They're like, we're going to wait for rates to come down. I'm like, well, if you wait 6 months and you've paid all that money in rent, you could have just bought your rate down to where you think it should be. I
Yeah.
would never recommend that. And also the price that you would have paid for a house is now higher.
Yeah.
So it's a kind of a losing battle to play the rate game.
Now, this might be a biased question, but do you think renting is ever the right move?
Yeah. Um, I think it goes back to what the lifestyle of the person needs to be. Sometimes renting is just an easy way to go. And if it's in the budget and people don't want the responsibility of home ownership that goes with that investment, most times that investment pays off
Hmm.
and that's good. But say you're downsizing and your kids are grown and you're an empty nester, and the cost to enter, say in Florida, where you want to be in the winters, is too high, and you're looking kind of at your estate, then sometimes renting is absolutely the answer. Um, or if somebody's like, I just can't deal with the stress of being a homeowner, fine, you know, pay my mortgage because I'll rent you a place.
Yeah, it does seem like that. I mean, if you're younger, I guess, or if you're kind of preparing for the future, um, paying rent, that's money that you're never going to get back. That's money that you're paying your landlord, and
Right,
you'll never see it again on the other end. But yeah, on the other side of it, to become house poor, like we mentioned earlier,
right.
where you're just everything that you're making is going into the house. There's
Yeah,
kind of that level of the like, where am I really happy with life? Yes, I have this house,
right,
but you know, am I happy with that purchase?
right. And it's like a forced savings account. You're paying your mortgage every month, and a portion of that is going into the equity. You're purchasing equity. Your house is appreciating. There's an old generalization that says if renting was better than owning, then there would be no landlords, so to
Yeah.
speak. But also, when you're renting, you're not going to hear many loan officers, say, renting's terrible. I'm the only one that'll say sometimes renting is the answer. What if you're relocating and you don't know and your job's temporary? Or what if you just don't want the responsibility? Say you're a single mom and you have a huge career, you're going to school, you're working nights, and do you really want to worry about mowing the lawn, plowing?
Yeah. Or
So
the
there's
roof's leaking.
situations
Yeah.
where
Yeah.
even though it might not be the best fiscal thing to do, it's the right thing to do for the chapter of life that you're in,
Hmm.
where it's less stress.
Yeah. Where mental health kind of also your
Yeah,
physical, like you just
mental
simply don't have
health,
enough
man.
time. Yeah.
Yeah.
Yeah. No, quite literally. In terms of the kind of the market or the environment that we're here in Central New York, what kind of trends are you kind of seeing comparative? You said you're licensed in 7 states and you have business in other
Hmm.
states. What, I guess, the unique element of Central New York, or maybe
Hmm.
some challenges or pros and cons that maybe we're not realizing by being here in our little kind of bubble?
Yeah. I mean, that's a whole other podcast that we could go into, but I'll give you the cliff notes. So it's amazing. Business here, real estate in central New York is vastly different than Rochester, vastly different than Buffalo. I've been doing some business in New Jersey by the coast, vastly different. The culture of real estate changes immensely depending on where you're lending. In central New York specifically, we have a great group of colleagues. Like we have some of the most gracious attorneys and people that like to work together to get deals done. Like we play in the sandbox very nice together here.
Hmm.
Some areas it's like a poker game, and it's very different. And then some areas where you can't believe how nice they are. They're like, yeah, whatever. Like in Georgia. So if in central New York, I mean, without going into like Micron and all the great things happening, Syracuse is hot right now
Yeah.
for investors. I mean, it's one of the best places in the country right now to invest for real estate. And word's getting out. And so there's a lot of activity. There's a lot of, I think, subsidy in the government. And Brian McMahon's talking about making new home construction more affordable, working with our builder community. Very exciting things. So here right now, I would say a couple things. There's a lot of houses that, because New York State's old, there's a lot of houses that need work.
Mhm.
The answer to that may be renovation loans. So we have renovation lending products where if it's not the perfect house, if it needs updating, then we can combine a renovation loan into the purchase of a home. And that might open up more properties to first time home buyers that need a fence in the yard. They can't quite afford to do the repairs themselves.
Mhm.
So there's that whole pocket. And then there's access to new construction where the barrier to entry is pretty high for a first time home buyer, but we need to dislodge existing homeowners and move them up.
Yeah.
And we're starting to see that happen. And going back to rates, the other thing people do is they sit on their low interest rates because they're scared to let go of that.
Yeah, that low
It's
rate.
almost like they're losing a badge of honor kind of
Mhm.
thing, and they're putting their lives on hold, whereas they could continue with their life and make the economics make sense for them to move on. So does that answer your question? Kind
Yeah,
of?
yeah.
Yeah.
I guess for someone that might be in Central New York right now, local,
Hmm.
and exactly kind of how you said, like the Micron, the investment, we got the 81 project coming through and
Yeah.
everything, Micron's coming through and everything seems like it's getting either torn down or redone or
Yeah.
new construction coming through and et cetera. How does someone that's here right now kind of not feel left out from the table? What do you recommend?
Somebody that's here right now that wants to become a homeowner
Yeah,
or
yeah, some or either a homeowner that wants to become a homeowner, or
or an
maybe
investor.
or investor, or someone that's like, hey, I could be, I have, a quote unquote nest egg, or I have some
Hmm.
capital that I could put into something.
Yeah.
What's the logical thing for someone to do right now?
I think investing in real estate is the answer, especially for local people. There's a lot of foreign investment that's coming in now. Getting calls from really every state that's coming in saying, "Hey, it seems so cheap to them." If
Yeah,
somebody's calling from Los Angeles, they're like,
yeah,
"Hey, I have 50 units here. I want to start buying in Syracuse." I mean, they're going to do it. And so, from a timing perspective, I would say to people that either aren't a homeowner or they're a homeowner now and want to pick up an investment property to explore that and really jump in. Give my team a call. We'll talk to you about investing. I've been investing in real estate for a very long time. I have rental properties, Airbnbs. I know some of the biggest investors in the area, and it's still a small community. And we want to keep it local. We want the local people to enjoy the fruits of all this development and activity that's going
yeah.
on. And investing in real estate is really one of the safest and easiest things you can do. Not that it's not without its
Of
frustration,
course, yeah,
but talk to us. I'll tell you what you need to do if you don't qualify now, what you can do to qualify. If it's 3 months, if it's 6 months, if it's a year. So I'll help anybody that wants to talk about getting into investing or becoming a homeowner. But that I think is the best way to plant roots and to help the community, make more people homeowners and more homeowners invest in their local community.
yeah. I think that's a big. I've kind of seen even like commercially, like when we were looking for this space. I think that's a big almost like trend that's happening of foreign, meaning out of our state, because comparatively Syracuse, Central New York area, comparative pricing to like, I have a family member that's a realtor in the Washington area, in Seattle area,
Oh
and
yeah.
like the things that she was showing us, like homes that are going for seven figures, plus,
Oh
and
yeah.
we're comparing it here, and we're like that would be like a $400,000 house here, and they're like, nope, we just closed on the house, 2.8 million, and we're sitting there looking at it like, wow, that's insane. Someone that's investing from Seattle or Los Angeles or a New York City or
Hmm.
Miami, and they're looking at our prices here.
It's like chump
It's
change.
chump change
Yeah.
comparatively, but then, what ends up happening is like we as a local community, we're almost getting, could, or not necessarily, but could be in the future, getting priced out of our own area
That's right.
because the investment, they're coming in and comparing the price of something that's in the city,
Right.
and saying, hey, comparatively that we could be charging more for it, and now
Yeah.
everything's going to go up in price. And we almost exactly like I said, we get priced out of our own backyard.
That's 100% correct. And it's going to happen fast, and not to alarm anybody, but if you are thinking I'm going to wait till next year to think about buying a house, I would caution you against that and say, what's wrong with starting now? And somebody might say, well, I don't have any money. Some programs, you don't need any money to close on a home. Some programs are zero down. Veterans are zero down. If you're buying, there's tons of agricultural areas around here. USDA has a program that's zero down. You can often roll in closing costs or participate in grant programs. New York State actually, you know, for all the naysayers, has a ton of grant programs that are out there that not a lot of states have. And that's not just for helping you buy a home or get into home ownership, but even if after you buy a home and you want to get new windows or get energy efficient improvements,
Hmm.
New York State has a ton of money set aside for that. In fact, my mom just went through this and got like her basement sealed and everything for free from like a zero draft type company that participates in energy efficient upgrades. So, and realtors and good loan officers are really going to know about these programs and say, okay, you actually qualify for this based on what I'm seeing.
Yeah.
But to your point, yes, getting priced out. I think there's a call to home ownership right now that a lot of people that are sitting on the sidelines or nervous about applying should kind of put those fears aside and get a consultation. It doesn't cost you anything. You know what I mean? You could at least see where you are.
Yeah. I think the biggest thing is people are exactly like you said earlier. They're comparing that, the interest rates used to be that, and
Hmm.
they're like, okay, maybe it'll come back to that. But by the time that maybe one day it does come back to that, you're already going to be priced out of doing that, and the availability of actually getting that home. And people are afraid of like, oh, I'm going to be paying more in interest. I'm going to be paying more in, et cetera costs. But by the time that cycle comes around where you feel
Yeah.
like it's a good time, that time has passed and you're now paying 2 times the amount of money that you would, to do. Like, I'm comparing my friend, like, for example, my friends just closed on a home that's half the size of my, another friend's home for the same exact money that their home cost 5 years ago. I know that's a lot of backwards, whatever, but basically,
I
in
gotcha.
the in 5 years of time, essentially, the amount of money that you can, the amount of house that you can buy for the same amount of money has halved, essentially,
Yeah.
just because that's just the market now, and especially
Yeah.
whereas before, you have multiple offers and people are like, okay, how low, we can come a little bit lower. Now it's, people are paying over asking price, and houses are not staying on the market for very long, and just
Hmm.
the nature of deals, etc. I think, yeah, it's, and especially like we said earlier, we were looking at different office spaces one night, and I'm like, what are these landlords asking for? And
Yeah.
then you look into it and it's like, okay, it's a brokerage based out of New York.
Mm.
It's again, the foreign investment, almost, in a sense, as
Oh
opposed
yeah.
to someone here locally in Camillus, or locally in Syracuse, or locally in Marcellus, etc. Like, they know the environment, they know the community, they have a connection to it.
That's right. Yeah. You said something interesting, which is people have a feeling that they should wait or that, pricing or because where rates were. And that's the problem. They're not using logic and science because if they do wait for rates to come down, what do you think's going to happen with competition? Now, the house you're bidding on today you're maybe bidding against two or three people, rates go down to three, and now there's 20 people bidding on that house.
Yeah, because
You
now more
know?
people have access to
Yeah,
money.
exactly.
Which is literally the whole point of why interest rates go down, is so that more people
Right.
are have access to capital
That's
to be able
right.
to make that happen.
But we can't build houses fast enough to accommodate every person that wants to be a home buyer, you know? So,
Does building make sense for someone that's a first time homeowner, in your
sure.
opinion?
Yeah. In many instances, it does. Some people are delayed first time home buyers because they're in a highly professional field. For instance, they're coming out of residency in their physician program. And so a lot of their 20s was spent leading up to the moment where they're buying their first house. And they're walking into, for that effort, maybe a higher price point, which could fit very well into that new construction space,
Mhm.
499, 599 and higher. And so for somebody like that that's starting their career off finally as a well-trained doctor, they might not have time to compete and look around. They can afford it now, and they kind of skipped over that starter house
Start at
phase
home.
because
Yeah.
they were too busy,
Yeah.
going to school. So sometimes, yeah,
Uh,
that's one example, but yeah.
we always like to ask the question, or so our podcast is named Standing on Business, which
Okay.
means kind of like what is the values, the ethics that Joe Dougherty kind of stands on? What's the thing that you would say that boils down your being as a business person?
I'm very competitive. We have a saying in my office, everything closes. I don't like to lose. So when we pre-approve somebody or give them a plan, it's it keeps me up at night if something can't close. We always find a way to get stuff done.
Hmm.
So the business we stand on is really reliability. We're selling trust. We're selling safety because what we do has so many anxiety points for our business referral sources, for our home buyers. It's really, really important that we stay solid and we are that voice of surety, of safety, and we back up our claims and we're able to close and see happy homeowners. So essentially, in a nutshell, that's it.
Awesome. Joe,
Yeah.
if someone is, that listens to this podcast is like, man, I need to get either into my first home or I need to get into an investment property. How can they reach out to you and your team? What's the best way to get in touch with you?
Just Google Joseph Doherty loan officer. I should be top on the search engine.
Awesome.
Or AI. Somebody called me the other day, like I was looking, I typed in who's the best loan officer in Syracuse and your name popped up first. And I was like, I don't know how that is, but I'll take it.
Good to hear. Good to hear.
Just
Absolutely.
a simple search. You should be able to find me.
Sweet. Thank you, Joe, for joining us
Thanks,
today.
Ben.
Staying on business, this is a close of our podcast for today. Guys, if you are a business owner or organization leader here in the CNY area, we want to talk with you. Please reach out to us. And as always, guys, thank you so much for listening. We'll see you on the next one.